for us. Patterns imply consistency, do they not? So in other words, if I can identify a pattern that repeats itself over and over again, it implies to me that I'm going to get a consistent outcome. But do I get a consistent outcome? Well, yeah, I do, but it depends on what level you're talking about. At the macro level, over a large sample size of outcomes, it will be consistent. Just like the flip of a coin. If I flip a coin 1,000 times, and I have, let's say, if I have sample sets, if I do 10 sample sets of 1,000 flips, what are my results going to be? They're going to be consistent, are they not? Is that a pattern? I'm going to get a 50-50 outcome, or close to it, if I have a large enough sample size. That's at the macro level. I can get a consistent outcome. But at the micro level, what about each flip in relationship to each other? Yeah, in other words, independent and random. So for an example, if I know that out of 1,000 flips, I'm going to get a 50-50 distribution between heads and tails, am I going to know the exact sequence of heads to tails? No. So I could end up with, streaks of 10 heads in a row, 12 heads in a row, and if I get 12 heads in a row, what are the odds that the next flip's going to be heads? It's still 50-50, right? And so at the micro level, there's a random distribution between heads and tails. At the micro level with trading, or using technical analysis, there's also a random distribution between wins and losses. So you could develop a trading system that you could test and find that, over a whatever sample size of trades, you could have 60% winners or 60% winners, 10% scratches, and 40%, losing, or 30% losing trades, but you wouldn't be able to tell me the actual sequence of winners to losers to scratches, meaning which trades were going to be the winners and which trades were going to be the losers. Which means what? Random outcome. Which means that I'm going to have to adjust my thinking in a way that allows me to compensate for the fact that there's a random outcome when my mind will tell me something different. Because it doesn't feel that way. So for an example, if I get 4 winning trades in a row, what are the odds that the next trade is going to be a winner? Yeah, I don't even know really what when you get right down to it. I mean, it's just like there's almost no way to really put odds on it in some cases. I just don't know what the next trade is going to be no matter what. But is it going to feel that way? If I've had 3 winners in a row, what's the next trade? And my edge is now present in the market. The way I define an edge, the variables I use is now present in the market. Is it going to feel like that next trade is going to be a winner or a loser? A winner. And that's because of the way our minds are wired. If I've had 3 or 4 losers in a row, and now my edge is present in the market, what's it going to feel like? What's that? Yeah, I'd be scared to put it on. When in fact, there's a random distribution between wins and losses. I have no way of knowing whether that next trade is going to be a winner or a loser. Now, if I've learned to think in probabilities, I wouldn't even hesitate to put that next trade on, regardless of whether I've had three losers in a row or 3 winners in a row. And once I've learned how to integrate, or once I've learned to effectively think in probabilities, if I've had 3 winners in a row, I also won't break my money management rules. But getting to the point where I can think in probabilities can really present some problems. There are 2 basic areas that we have to deal with. One is our social upbringing, and the other is the way our minds are wired. get into in a little bit. Let's see. So basically, what I'll get into this stuff in just a little bit about the way our minds are wired and our social upbringing. But what technical indicators don't do is they don't tell us what's going to happen next on a trade-by-trade basis, and that really is a problem. Because in essence, what we have to learn how to do is we have to learn how to keep our minds focused in the now moment, meaning like what is going on now in this moment relative to my objective to be a consistently successful trader, and not allow our minds to, let's say, tap into a memory of a previous moment. And the problem is our minds are automatically wired to think that way. Our minds are wired to do two things that we have to be concerned with. Our minds are wired to associate, and our minds are wired to avoid pain. And yeah, right. And if you do the exercises as I'm going to give you on Sunday, it won't be that hard. The exercises themselves might be a little difficult, but once you get through it, it'll work. It really will. Because what those exercises are going to do is they're going to actually cause your mind to disassociate what's happening now in this now moment in terms of an opportunity to do something with some previous trade. And also at the same time, not cause you to define and interpret market information in painful ways, because that's basically what ends up happening. So when you look at it, when you look at what this, if you look at what the market does at its most fundamental level, is it gives us up and down ticks, right?
Okay, good morning, guys. Before I get into this, I'm extremely tired right now, and but still gonna get this done. But today's another backtesting session, so it'll be another call where I'm not really talking, just gathering data and going through charts. Now, unfortunately, as I was staying up all night, I didn't charge my camera, so we're gonna have this perspective over the live trades that I'm holding. If you guys do have any questions or any pairs that you want to go over, please type it out now so we can talk about it before I get into the backtesting session. That way I don't have to flip back and forth to the live chat. And that way you guys that wait on the chart review can get it done. We can get it done and out the way first. Yeah, if not, I'm gonna just flip through the three pairs that I'm holding, and then I'm gonna. Man, why do I feel like I'm out of breath? And then I'm going to get into the backtesting. Okay, first off, EURJPY. EURJPY holding two sells. Just looking for price to scale down right now, and gonna keep on holding this until the trend line breaks. If that trend line breaks, I'm closing both positions. This one's at break even already. This one still same stops. Nothing's changed here. And gonna be still managing this on the 4-hour time frame. So 4 hours not telling me to do anything right now. Could possibly see price reject this level one more time. Oops, let me see. Reject this entry level that I have here one more time. Possibly it's either gonna reject it or it's gonna just break up and continue pushing through. So we'll see how price reacts as it scales up higher, if it scales up higher. AUD/USD holding the sell. Major confirmation with the break of this pattern, so Still liking this setup, like it a lot, and just gonna continue to hold. Stops cannot be moved yet. Still waiting for a level to be broken before moving it to break even. Okay, pound dollar. Pound dollar is looking more and more bullish to me as it continues to scale down to this level. It's insane how I don't have an alert here. Like I said before, want to check how price approaches this area. If price gets to that area, I'll evaluate whether to hold or change my bias. But right now it's looking like a potential buy for me. Okay, let's go to gold. I'm gonna need some water, so after I get through this, I'm gonna turn Mark Douglas back on so you guys can listen to Trading Psychology. I'm gonna go ahead and grab some water before digging into the backtesting session. Okay, I need to start adjusting things on here. So yesterday I said look for buying opportunities. I'd still consider looking for buying opportunities. Just stay higher time frame impulse and correction, and finding a buying area as price scales down here. But yeah, because typically after crashes you want to do the opposite of what the crash was, and then after the crash price usually goes back to what it was originally doing. Right, it just takes an extended amount of time for a price to actually do it. So that's our zone. Right now we have a downtrend like this. Till that downtrend is broken, technically we can look for sells. Prices have reached the bottom here, so let's break this down. This line down here is telling me every time price gets down here, look for buys. Price has hit this level, so price is making this rejection. So we should be looking for buys in this situation. This downtrend tells me to look for sells. Now I should be looking for sells until this demand zone is touched. Now the demand zone is touched, so we got that. So we know that we should be looking for buys typically, and at least look for buys until this trend lines, until price reaches this trend line again. Because ideally within a range you want price to come down here, then you want it to go back up, then come back here, then go back up, just like, you know, the basic ceiling floor type thing, just a bouncy ball going back and forth. So we got this impulse, this large correction, price pushing down, we got this crash, we're looking for price to continue to push up. Okay, let's adjust this off the daily like that. And that should look better on the 4 hour. It looks way better on the 4 hour. Goes down to 1 hour. 1 hour, I like this impulsive move up. I like this pullback so far. I see on a lower time frame, it looks like there's a selling setup right here to push price down. Now how far should we be looking for price to push down? Looking for somewhere in this area, and let's go down to the 30-minute time frame. Nope, let's go down to the 15-minute time frame. Yep, that looks amazing. So it looks about like the 50 Fibonacci level, which typically in this scenario I want to see the 38.2 Fibonacci level actually be tested. Oh, did I? Okay, it is a 38.2. I guess I was wrong. So a little bit lower than 38.2. I'm looking for price to test, and that's actually perfect. That's actually better, at least in this situation for me. I'm looking for a buy in this scenario. Let me actually keep that up so I can label the targets for this trade. I'm gonna go ahead and send this out to the Discord. Now, I won't typically, matter of fact, at the beginning of the calls, if we get like multiple people on the call before I dig into bad testing, I'll go ahead and do this like before, so you guys don't have to wait an hour or hour and a half, however long it takes me to typically back test in order to get this analysis, or to get updates on what I'm looking at. Oops. I just sent a war. Copy link. Image. There we go. US 30, which I believe yesterday I said I'm not looking, didn't really like any opportunities that were here. So price broke below this level, not as strong as I would have liked. We have an impulse down here. We have a correction here. Looking for sells in this situation. Would like to see price potentially come back up to this level, then come down and break that zone, break this pattern here, and reach the bottom of this corrective movement. This situation is not something I'll take. There's other opportunities, so it's also be a setup I'll just pass on. It's not the cleanest setup ever, especially with US 30. Okay, finally Bitcoin. No. BTC. Awesome. Okay, Bitcoin, I believe I was looking for this level to be tested again. Price hasn't come down to that level yet, or at least since I've been looking for it, it hasn't come down to that level. Something better. What's a daily? Oh, here's an even better setup. I think this is the setup that, yeah, okay. I'm still looking for that level to be tested. We have two possible zones. We're gonna first place this zone here, then this zone here. They're really close and tight to each other. Retracement hasn't officially started yet, so can't really define which one it is just yet. We can tighten these zones up though. And right now I'm favoring the top level. Yeah, right now I favor the first zone, obviously, because that's going to be the first one that gets touched, and it could be the first rejection there, right? So impulse up, waiting on the correction, looking for a continuation up, and we'd like to see the continuation play out to the top of the zone, which is about 64,712. 64,712 on Bitcoin, looking for price to push up to that level. All right, so it looks like there are no requested pairs. So I'm gonna go ahead and dig into, I'm gonna dig into my backtesting and start playing Mark Douglas in the background. If you guys want to see any pair while I'm doing this, because I'm not gonna show my backtesting. I like to keep backtesting private, at least for now, especially with the work that I'm working on right now. So if you guys do have any questions, type it out within the next 5 minutes, because after that I'll hide everything and I'll just be focusing on getting my work done.
I mean, think about it. What does the market give us? It gives us upticks and downticks, downticks and upticks. The upticks and downticks form into patterns. Technical analysis helps us identify the patterns and so that we can and help us define them as edges. Edges meaning there's a higher probability of one thing happening over another, meaning ultimately meaning that if we know how to execute our edges properly, we can enrich ourselves as traders. That's simple, right? Because when you get right down to it, putting money in your account is a function of execution. It's not a function of analysis. Think about that. It's a function of execution. You cannot get a dime in your account from just analysis unless you're a newsletter writer or, or offering analysis as a service. As a trader, the only way you get it in your account is by executing properly. And there are all kinds of psychological factors that come into play when we have to behave as opposed to observe. Analysis is a function of observation. Trading is a function of execution. Observing something and acting on it are two completely different ball games. So what we have is we have up and down ticks, right? The up and down ticks, like I said, form into patterns. Now, do the up and down ticks in and of themselves have any charge associated with them? Yes? You think there's a charge? I mean by like negative or positive charge? You do? Why?
I think that at certain times, depending on which way the market's going, you associate different feelings based on which way the market's ticking, whether it be up or down. I think some people can have a tendency, if they're in a losing position, to focus much more on the upticks that go in their favor, the ticks that go in their favor, as opposed to the ticks that go against them.
Oh, I agree completely with what you're saying, but I think you might have misunderstood my question. From the market's perspective, is there a charge to these up and down ticks? No, they're just neutral, right? So what you said is basically exactly what I wanted to get to. It's not the market that causes us to be euphoric or feel fear. These up and down ticks, that's all they are, just up and down ticks. There's no intended, in other words, they don't exist from the perspective of causing us to feel any particular way. It's just information. So for example, when we're interacting with people, the intent could be to cause us to feel some particular way, right? We could be interacting with someone who is being very affectionate, that wants to share that affection, and if we interpret that information in a way that's consistent with what they intend, then we will share that experience. At the same time, if someone's hurling insults at us, what's the intent? In other words, the environment can generate information that has an inherent charge to it, a positive or a negative charge. Are you guys with me on this? I'm kind of getting faces that, So the environment can generate information that has a charge. But market information is neutral. And as a result, for us to experience market information in any kind of painful or threatening way requires an interpretation of that information. So we have two basic kinds of pain that we deal with. We've got physical pain and we've got information-based pain, which I'm going to call emotional pain. All of us understand the nature of physical pain, and we pretty much share the same things. In other words, our body physiology may be different, so that if I punch you in the arm or you punch me in the arm, we might feel a little bit differently about it. I mean, how much pain we experience is hard to measure, but we're both going to experience pain. But is there a universal definition for betrayal? Do you think there's a universal definition? So in other words, what might cause you to feel betrayed and what might cause me to feel betrayed could be vastly different in terms of the kind of information that I would need and the kind of information that you would need. So the market generates information from a neutral perspective. But we don't perceive it that way. That's what we want to get to. We want to get to the point where we are actually perceiving market information from a neutral or objective perspective, so that it doesn't have the potential to cause us to feel threatened in any way. So that we just see the patterns for what they are, simply an edge indicating it's time to do something, and do something in a certain manner. But go ahead.
It almost seems when you say that, to me, I think the underlying factor there is less is probably more. Like the more indicators or things you would have on, the more you would try to make something appear, and then just that simple price chart you might not.
Exactly. And why would people gravitate towards having more and more indicators? Because they're trying to avoid losses. They're trying to use, every possible filter to help them filter out the possibility of a losing trade. Because see, basically the typical trader does not really accept the risk of trading. Only the very best traders truly accept the risk. Now think about what I just said, accept the risk. The key word is accept. What does it mean to accept something? And when you think about what it means to accept something, it means to be completely reconciled, to be at peace, where there's no internal argument. Most traders like to think of themselves as risk takers because they're involved in an endeavor that's inherently risky. And so therefore, they think of themselves as someone who takes risks. But the reality is that most traders are doing everything possible to avoid the risk of trading. And how do we know that to be a fact? I know that to be an absolute, undisputable fact. Because most traders still make the mistake of not predefining the risk of putting on a trade. What's the connection? To predefine your risk of putting on a trade, you have to gather evidence for why the trade might not work. Most traders don't put on a trade until they've convinced themselves 100% that the trade's a winner. Why would I put this trade on if I didn't think it was going to be a winner? Right? To predefine my risk, I have to start gathering evidence that it might not work, or why it might not work. And in the process of gathering that evidence, I might talk myself out of the trade. Right? Now see, someone who's thinking in probabilities, it wouldn't even occur to them to think this way, but we'll get into that in a second, okay? So if I gather too much evidence, I'll talk myself out of the trade, and many times it feels worse to not have put on a trade that ultimately ends up being a winner, as opposed to putting on a trade that ended up being a loser. And so to get around that whole, to get around that let's say that whole rationalization, what we do is basically just convince ourselves that I wouldn't be doing this if I didn't think I was right. And so therefore, there really is no risk, or I wouldn't be putting on the trade in the first place. Now that's easy to do, and this is what I'm talking about, like when I say that there's two inherent problems.
You caught me right before I started, my bad.
And our minds are also wired to associate.
Hold on.
That's a real problem.
You caught me right before I started backtesting, so I'm happy I looked at that. You said, what do I think of UJ? But I will have to start pretty soon. I don't want to backtest past 9 o'clock. At least for the morning. I want to see how price reacts to this area. I don't have a solid setup here just yet. see a potential expanding triangle. I like dollar yen moving to the downside instead to the upside, because I don't really see a nice setup to the upside right now. We do have this strong push up, so I'm looking for some type of rejection anyway for a short period of time, whether that's a correction for a shorter period of time, or like I have drawn out here, an actual downtrend to start. So right now it's just waiting. I like this selling pressure in this area, but if these highs get broken, that's when it gets a little bit iffy. So just have to wait for solid confirmation. Right now there's no solid confirmation for me. Yeah, but I am liking the sell more and more, especially with this type of movement approaching this this zone that I have here. Okay. Okay, I'll continue looking at the chat until 7:35. So if you guys do have any pairs you want me to go over, please type them out, because after 7:35 I will not be looking at the chat for another hour. And honestly, I'm not liking. Yeah, honestly, yen has the potential to reverse, but we're gonna watch that on the daily right now. Oh, my bad. I forgot I was still unmuted. All right, so it's looking like there's gonna be no more requests. So I'm gonna go ahead and mute myself, turn the audio back on, and get to work. So I'll check again at the end of the call. So in about an hour, If you do type the question out, I will go ahead and answer it later. But I'm going to start now.
Yeah, it doesn't have to be exactly more people in terms of sellers, but at least there was more selling volume, enough volume to absorb all the buy orders with enough left over to cause this to happen, right? In this particular time frame, whatever that is. This could be any time frame chart, by the way. It wouldn't make any difference, right? Okay? And so we've got, so what happened? The exact same thing happened here, only the opposite. Enough buy orders to absorb all the selling with enough left over for the market to do this. Now, when the market came down to this point again, we have what's called an edge, right? Right, we got an edge. If you trade support and resistance, that's an edge. An edge is a higher probability of one thing happening over another. Do we know what's going to happen in this case? Do we know that the market's going to stop here and go up? And why do we know that? Why do we know that we don't know? Okay, but why do we know that we don't know? Based on the context that we're talking about right here. Okay, but why do we know that we don't know? Yeah, we don't know if the same guys are here. That were the same people that bought here. Are they in the market? They could be out to lunch. Right? What? Or what mood they're in? Right? Exactly. We don't know. And in essence, it really only takes one trader somewhere in the world to negate the positive outcome of your edge, whatever it is. Now think about that. It only takes one trader somewhere in the world to negate the positive outcome of your edge. Just one. So in essence, when we say, well, we're going to define the risk of this trade, well, what is the risk? Okay? We don't even, we don't have a scale here in terms of dollar value, but we can say that how much distance, how much room am I going to get to let this price move against my position if I'm a buyer right here to tell me that whoever we're buying here are either in, or they're either going to come in or not come into the market. That's basically all I'm really saying. And that could be what we call an educated guess. E-D-G-E, edge, E-D-G dash U dash cated, educated guess. That's all it is, a guess. However, let's say, for an example, we're operating out of the typical mindset of the typical trader. And the typical mindset of the typical trader, he's operating out of four basic fears. The fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. Now, what's going to happen in this case? First of all, the market's coming down to what he defines as an edge. Is he going to put this trade on even? Is he
I guess I lied. I guess I'm procrastinating, but I'll answer your question. I actually took FTMO last March, and I have the 10K account. So I wouldn't necessarily say it's the best way to go. It's the most popular way to go. And honestly, the prop firm that you go with, if you do decide to go with a prop firm in order to gain capital after you're consistent, it's not a bad choice. In my opinion, I haven't had any trouble with them at all. They've actually communicated with me pretty well. And I've actually made a mistake, and we were able to work it out early on when I first started. What else? But yeah, there are other prop firms out there. FTMO for me at least wasn't the best option. I wouldn't necessarily say it's the best option now, but because I'm a swing trader, so I'm not with FTMO. I wasn't able to hold over the weekend. I wasn't able to trade during news, which news doesn't really matter to me. It's because for my positions, it's just make sure I have my stops in the right place, make sure I wait for the proper entry, and if all those are in place, the news violates those parameters that I have, I'm going to reevaluate the setup. If it's still valid, I'm going to go ahead and re-enter. If it's not, then it doesn't matter. I'll just find the next setup. Um, but yeah, since the swing trading account, I really like FTMO a whole lot more because they offer a refund after you pass the challenge. Uh, One thing that can be pretty deceiving with them is the short period of time that you have to actually pass the challenge. Just because you're able to make 10% 2 months in a row, or make 15% within 2 or 3 months, doesn't necessarily mean you're consistent, doesn't necessarily mean you have everything, all the capabilities to actually maintain that account over a long period of time. That's something that I actually struggled with within the first few months of getting it. After, man, I like this. You're waking me up. So after the first few months of passing the FTMO challenge, I had profitable months. I think it was about 3 or 4 profitable months in a row, and that was when I first like broke out into consistency. Before taking FTMO, I was consistent for about 3 months, so I had profit all throughout that part of the year. Second half of the year, I had my first drawdown, and I wasn't really educated on drawdowns, so I didn't really know how to handle it. So I thought, oh man, I'm not consistent. First, I thought I wasn't consistent anymore, and then I was reaching out to the people that to help me out with it. But I found a lot of people had stopped trading because the pandemic had messed some things up in their life, and they just like push trading to the side. So people that I thought that were with me like weren't there anymore, and I was just alone. So I had to figure some things out for myself. So I say all that just because like you have to know your drawdowns in your system, and you have to figure out a plan to actually handle it so that it doesn't become something that's overbearing to you and ultimately ends up with you sabotaging yourself and sabotaging and not following your rules, not staying disciplined. Because for an extended amount of losing, you can be disciplined for a period of time, but if you don't have that ultimate faith in your system, you don't know all things that could possibly happen or are prepared to handle those things, your faith, your discipline can alter and can lead to sabotage yourself. So during that time, that's why I like Fivers a lot more, because you have 6 months period of time, and you can be way more patient, and you can learn things about your trading. So it really all depends on the type of trader you are and the reason that you're doing it. If you're looking to get capital, just real quick, if you're looking to get capital, I say FTMO is the quickest way to get it. If you're looking to educate yourself on your strategy and gradually improve, I say Fivers is the best way to go. It's the least stressful way to go. But unfortunately, they don't give a refund after passing. And I know there's a lot of others, but I don't. If you dig into like too many prop firms, you start to think, oh, I'm going to take this test, this test, this test, and the goal is not really to take the test. The goal is really to get capital so you can just be consistent. The goal is to just be consistent. It's not to pass every freaking prop firm that's out there. And I say that angrily because I got in that mindset for a period of time. I started to take so many tests at the same time, and I was like, what am I really trying to do? What am I really trying to accomplish? Okay. What did you call the second one? The Fivers. Yeah, so in my Discord, I have the link to the prop firms that I've taken the test for. It's under this series trader section. And right now I just have FTMO and Fivers in there. And both those links actually help me out. If you want to show support, you can sign up to there. Fivers, now they ended the deal. Fivers had a free test that you could have taken over the summer, but it's recently ended. Fivers will help you manage, will allow you to manage up to 1.2 million. FTMO, I think it's still 300K. I don't believe they've increased that, but I haven't checked recently. All right, bro. This is the last question I'm gonna answer. There's so many books, so I'm gonna recommend 3 books. Um, and it all depends like what phase you are with trading. It's not necessarily number one, of course, everyone recommends Trading in the Zone, and I've actually re-listened to it actually Sunday, and the last chapter has a lot of actually all the chapters really. There's a lot of information in that book that I didn't catch the first like 10 times around, and that I've began to backtest, and I've noticed, wow, if I actually implemented this before, I wouldn't have had the problems that I ran into. So, like, break down Trading in the Zone, because not only is this psychological information, there's actually applicable information for your actual trading, right? What is it called? The Trader's Creed. That's something that's very, very vital, and something that I wish I broke down, written down, and actually put on a post-it note on my computer, because that's going to help you if you follow those step by step and you have a strategy that, I mean, that gives you a decent, if you have a logical strategy, pretty much, you can't help but be consistent by following those steps. Like, you can't help but be consistent by following those steps. So Trading in the Zone. One book that really shifted my mindset into focus on my character instead of like making money or like outside material things. What's the book called? It's by Joe Dispenza. Breaking the Habit of Being Yourself. That really shifted my mindset. And then The Mental Game of Poker. One of my favorite books. Alright. Been looking at you for a while now. You've improved my trading a lot. I appreciate that, bro. That's the goal. To document my journey and help other people along the way. I'm glad you're liking the progress. Alright. Now, I have to get this backtesting done. I can't procrastinate any longer. But I do really appreciate the questions. And I guess I do have to procrastinate a bit longer to type this out. And the last one there's also a variation of the Mental Game of Poker. Mental Game of Poker was just the first one. The other one's called the Mental Game of Trading, which just came out in May. Which it gives a deeper dive. And he adds a few more things in there, a few more principles in the Mental Game of Trading. But Mental Game of Poker, I still like it over the Mental Game of Trading. I've only gone through the Mental Game of Trading. I remember going through it one time. I have to go through it again. But Mental Game of Poker is really, really good. Really, really good. And Trading in the Zone, break it down. Don't just read it and say, oh yeah, I know that problem. I have that problem. Read it. Just break it down step by step. Really make a checklist and check off those boxes, especially the Trader's Creed. The Trader's Creed is very, very vital. You can just Google the Trader's Creed and check those things off. Alright, I'm done. I'm minimizing the chat. I won't be back. Alright, I won't be back for an hour.
We're going to get it on. There could be all kinds of factors that would come into play that he may not even get this trade on. But let's say he works through whatever fears or hesitations, or he convinces, it doesn't work through. I'm going to take that back and say, let's just say that he convinces himself that this trade is going to work. Because basically, that's the only way he's going to get it on in the first place. And if he's convinced that this trade is going to work, it's unlikely that he will predefine his risk. Basically, just go through the same kind of thought pattern that we just went through to say, hey, look, it only takes one trader somewhere in the world to negate the positive outcome of my edge. Therefore, how much room am I going to give the market, against my position if I take this trade right here to tell me that people are either going to come in and buy it and support this price or they're not? He doesn't do that. So he gets into this trade, and the market does something like this. Now, one thing I haven't said that you're going to have to keep in mind for tomorrow and Sunday is that, remember I said that our minds are wired to avoid pain. This is a natural way that our minds function. There are two kinds of pain, physical pain and emotional pain. Physical pain we talked about, okay? Hit somebody, come into contact with the environment in some way, and our physiology will cause us to experience pain. Emotional pain is different. It's information-based pain. Information can cause us to tap into something that's inside of our mind that is made up of, let's say, negatively charged energy and put us into a negatively charged state of mind or fear. And what is fear? Fear is just telling us that there's something out there that we need to avoid. Okay? Our mind has automatic pain avoidance mechanisms. So for an example, if I set my hand on this table, it turned out to be a hot burner, I don't have to think about moving my hand. It happens automatically, subconsciously. There's no argument, there's no internal conflict, my hand comes off. The same kind of mechanisms exist for information. In other words, our minds can cause us to experience information in ways that are very different than what was intended from the environment's perspective, based on what we might be afraid of. And can actually distort and alter that information in ways that are consistent with keeping us out of pain. So for an example, everyone in this room has learned enough about the nature of the market to say that you can recognize a trend, can you not? Is that a distinction that you've learned about the nature of the way markets can move, that the markets can trend? And we're going to define the trend as simply a series of higher highs and higher lows, or lower lows and lower highs in whatever time frame we want, right? Okay? And one thing we've also noticed about a trend is that once a trend starts, it can keep on going, right? In other words, we can assume that, once momentum gathers on one side of the market or the other, in other words, one side gets the advantage, one side has a stronger conviction about their belief in the future than the people that are taking the other side of the trade, that trend will continue until people's conviction changes. It's that simple. Okay? And a trend is an easy way to make money, right? Catch a trend, and that's an easy way to enrich ourselves, right? Okay, so, now, if I'm operating out of a fear of being wrong, and my mind is wired to avoid pain, now think about this. My mind is wired to avoid pain. The up and down ticks that the market's giving me will take on a certain quality in relationship to what's going on inside my mind. From the market's perspective, these are just up and down ticks forming into patterns that represent opportunities. I'm going to say that again. From the market's perspective, these are just up and down ticks forming into patterns that represent opportunities to enrich ourselves. But that doesn't necessarily mean we're going to interpret it that way. So if I'm operating out of a fear of being wrong, the principle that I'm going to give you right now is that the principle that you're going to learn about is that fear causes us to focus on the object of our fear so that we end up creating the very experience we're trying to avoid. Do I need to say that again? Fear causes us to narrow our focus of attention. Put it this way. Fear causes us to narrow our focus of attention onto the object of our fear so that we end up creating the very experience we're trying to avoid. So if I'm operating out of a fear of being wrong and the market's giving me upticks and giving me downticks, what ticks am I likely to focus my attention on and put greater significance on? The upticks. You say it louder. The upticks, right? Why? Because the upticks take me out of my pain. So for an example, if I'm getting one uptick in relationship to the downtick, one uptick for every 4 or 5 downticks, the market is in a downtrend, but what I'm going to do is my mind is automatically going to narrow my focus of attention so that I place an inordinate amount of significance on that information and categorically ignoring or either ignoring or placing a lack of significance on this information right here. Because this information is being defined and interpreted as threatening because it's going to cause me to tap into my fear of being wrong, meaning I have to admit that I'm wrong, which in many cases might tap us into the accumulated emotional pain of every time I've been wrong in my life. And so therefore, this takes on an enormous amount of significance. And so what I do is I categorically ignore this information in relationship to this information, because every time I get these upticks, it feels like relief to me. And I can say, well, it's finally all over. It's coming back in my direction. Now, this isn't the only fear this trader is going to be operating out of. He's also going to be operating out of a fear of losing money. But that fear is going to be sort of in the back of his mind and coming to the forefront the more the market moves against him. In other words, the more the market moves against him, the more he has to acknowledge the fact that he is losing money. And there will come a point at which there's a relative balance in this trader's mind in terms of these two energies. Now think about this. Think about this in terms of physics. There will come a point at which there is a relative balance or then a tipping of an imbalance, let's say, between what is more painful, admitting that he's wrong or losing $1 more. What hurts more? It's at some point, and everyone is different, you see. For every trader is different. At some point, that point will be reached in which losing $1 more will be 1 degree more painful than admitting that he's wrong. That's the way I like to say it. 1 degree more painful than admitting that he's wrong, and that's the point at which he'll get out of that trade.
Yeah, some losers you add when they add to the losers. Is that just another affirmation that you're right again?
Well, yeah, put it this way. You couldn't add to a loser. You're John, right?
Yes.
Okay, John, you couldn't add to a loser unless you're convinced, correct? You have to be. You couldn't take that action. And the problem is sometimes you're going to do it and it'll work. And hopefully that will never happen, because if you do it again and it works, if you do it again and it doesn't work, it could be a catastrophic loss. That's why, in the way that, in over the years when I've worked with traders, especially floor traders, there are very few people that I've worked with that are nimble enough to add to a losing position. I say nimble enough, I mean nimble enough mentally to be able to add to, or not add to a losing position, but add even to a winning position. I'm not saying there aren't some people who can't do it, but it's rare. It's a rare person who can do it. Because you add to a winning position and you literally have to be, unless it's part of a money management regimen that's objective, put it this way, that there's an objective money management regimen there. For most people, it isn't. They add to a winning position because they're convinced it increases their average price, which means that the smaller the distance the market has to go against them to put them into a losing trade, and they end up not with any profits at all, and usually a catastrophic loss. Whereas what we're going to do on Sunday is we're going to, you're going to see how important it is to actually scale out of your winners. Instead of adding to your winners, you're taking away from your winners. Anyway, let's get back to this. So, now, what happens when this guy finally blows out of this trade? Obviously, the market always does this. I mean, that's what that happens every time. But really, what else is he going to do? But I mean, what's he going to do? Not what the market does. What is he going to do when he gets out of this trade? He gets a clear head, and what's he going to say to himself? This is universal, by the way. This is universal. What's he going to do? What have you done? Come on, what have you done? No, forget the market goes up. Forget this. You get out right here, and you're going to look at this chart, and what are you going to say? Well, okay, but besides that, okay, what are you going to say? No, but besides that, what are you going to say? What? What? You're going to blame? No. How could I miss that? Look, come on.
How come I didn't reverse?
It's like, yeah, exactly. In other words, look at that nice trend. You're going to hit yourself in the head and say, why didn't I just sell? Why is it that as soon as you're out of that trade, you can now make this distinction that it was a downtrending market, whereas while you were in the trade, you could not make that distinction?
Fear is gone.
Yeah, the fear is gone, and it opens up your perception. Fear narrows your focus of attention onto the object of your fear so that you end up creating the very experience you're trying to avoid. He was trying to avoid being wrong and made himself wrong based on his interpretation of market information. Most traders will blame the market. And you can see that the market had nothing to do with his loss. Nothing.
Alan Greenspan spoke.
Yeah, whatever. And so what we have to do, of course, is learn how to trade without fear. Learn how to trade from a carefree state of mind so that we no longer have this potential to define and interpret market information in painful ways. The information itself is not threatening. It's the interpretation that makes it threatening. And there are internal mechanisms that control how we interpret information. That's what we have to get at if we want to create consistent results. We have to get at that mechanism that causes us to interpret information in certain ways and change that mechanism. That's basically what this whole workshop is about. Just as a side, before I go any further with this, is there anyone in this room who has not at some time felt betrayed by the market? Is there anyone in the room who at some time or another has not felt betrayed by the market? So what I'm saying is that everyone in the room at some time in their trading career, in some way or another, has felt that the market betrayed them. Daily, okay, good. You have not or have?
Oh, and the specialists.
Okay.
For the specialists.
Okay, now think about this. Now think about the relationship or the stance, the psychological stance you are taking towards the market when you feel betrayed. Just think about the implications here. How often have you woken up in the morning and said to yourself, I wonder how I can or might fulfill someone else's dreams of financial independence today? How might I contribute? Yeah, how might I contribute to someone else's dreams of acquiring wealth and financial independence through their trading? Because that's exactly what you're saying to the market when you feel betrayed. That's exactly the stance you're taking. You're expecting the market to do something for you. When the reality is, you already know the reality. Everyone trades for their own self-interest. Everyone who puts on a trade, at least when they put it on at that moment, thought it was going to be a winner, or they wouldn't have done it. The market is not there to give you money. You can take the money if you've got the appropriate psychological resources to do it. But it isn't there to give it to you because everyone else wants it too. And we can give it to ourselves based on how clearly we can perceive the possibilities from its perspective. That's why I say that thinking in probabilities is synonymous with thinking in the market's perspective. What's possible from its perspective based on the patterns that it's displaying in any given moment. Take this same trader and put him into a winning trade and look what happens. Now, in this case, the market's giving him exactly what he wants, okay? He's not in a losing trade, now he's in a winning trade. But what do you think? Typical trader, what do you think, now it's giving him up and down ticks that are forming into patterns. What do you think he's going to focus on, the up ticks or the down ticks? Now he's going to focus on the down ticks. Why? Yes, the market's going to take his money away. And in the process of believing or thinking or fearing that the market's going to take his money away, what is he doing? He's taking his own money away, right? So instead of letting this trend fulfill itself, chances are he's maybe out right here or right here. Probably most likely he's going to be out right here. Right? Because who hasn't been in a trade in a winning trade where they didn't take any profits, the market came back to their entry point or below, and they ended up with no money or a loss. So therefore, fear causes us to narrow our focus of attention onto the object of our fear, so that we end up creating the very experiences we are trying to avoid. The point is, if we are going to create consistent results from our trading, we cannot have this potential. We cannot have this potential to define and interpret what is essentially neutral information in painful ways. We just can't do it. Other than these kind of self-sabotaging errors that we might have the potential to make as a result of not, let's say, believing that we deserve the money, because in essence, remember that third category that I talked about, a couple of hours ago? We've got defining an edge, thinking in probabilities, self-sabotaging beliefs. Self-sabotaging beliefs fall into the category of, in essence, saying it isn't right to make money this way, or I don't believe I deserve the money. And there are a lot of people who grow up with beliefs saying that it isn't appropriate or right or let's say Christian or spiritual or whatever to make money as a trader. Some of the more difficult traders I've worked with are people who were brought up as Southern Baptists. Because a lot of the people that I've worked with that came from that kind of a background, it gets pounded in their brain from a pretty early age that gambling is evil. And it's very difficult not to look at trading as gambling, or not to find it that way. Or if you grow up from a background that you were taught that you have to render services, to be paid appropriately, you have to render some sort of worthwhile service. Now, certainly as traders, you're providing liquidity for other traders. That's a service of some sort. But a lot of times that's a real difficult one to put in and reconcile their belief that they're providing a worthwhile service.
Bringing up specialists who have children.
Yeah, right. Exactly, right. Well, the point that I was making was this, is that I kind of got sidetracked, I'm sorry. The point that I was making is that virtually every error that you have the potential to make as a trader, every error that will detract from your ability to create the kind of equity curve that we were talking about in the very beginning when we started, is all going to be a function of your inability to think in probabilities. Objectively think in probabilities. First of all, let's look at what those errors are. These are just typical errors. Well, this thing is really... Okay, what are the consequences of thinking or assuming and believing that we'll know what happened next? This is exactly what our minds cause us to do. In other words, when we have an edge that comes up where we have not learned to think in probabilities, our minds have the tendency to cause us to think we If we've had 3 losing in a row, what's it going to feel like? It feels like the next trade is going to be a loser, when yet we have no idea what the sequence between winners and losers is going to be. Our pain avoidance mechanisms and this inherent tendency to associate causes us to believe that we know what's going to happen next. Are you with me on this? Is everybody? I'm just kind of getting, when in fact our mind has to be open to the fact that anything can happen. And so here's what happens. We have a lack of objectivity. In other words, the inability to perceive the market's potential from its perspective, like what happens here, where what we did is we were completely blinded to the fact that the market was trending against us. It's really amazing how this works. It's like we are literally blinded to our own distinctions. As a matter of fact, if I were to kind of define the nature of objectivity, which we're going to go into later on tomorrow anyway, is that if you looked at like this, if these being all the possibilities that exist in terms of all the number of distinctions that the market can make in terms of behavior patterns, if someone actually was able to learn every possible pattern that the market could express, every possible pattern, let's say is represented by that line. It's erroneous to think this way, but this would represent 100% of the patterns, okay? Let's say the typical trader learns, I don't know, 20% of those patterns. Okay? Now, it means, in essence, what I'm saying here is that if you've learned to recognize 20% of the patterns, what about the other 80%? What are the implications of what I'm saying? They're invisible, aren't they? Yeah, you can't perceive them. Now think about this. They're invisible. They exist. It's just like the very first time you looked at a price chart. Now, the very first time you looked at a price chart, what did you see? You saw lines, but you didn't. You may even may have seen some patterns, but you didn't understand the relationships between what was going on with the lines. Certainly not like what you see now. So, if I could magically reproduce the very first chart you ever looked at in your life, would you see something different than the first time that you looked at it? You'd see opportunities that were literally invisible the first time, right? So what you're seeing are the patterns you've learned about, whereas they were literally invisible before that. So what I'm saying is that out of all the patterns that the market can express in terms of its behavior, there's some finite percentage that each of us have learned. Finite. And the ones we haven't discovered yet can be occurring, but unnoticeable. Okay? So this would be if you and I could perceive 100% of what was available, then we would be experiencing an objective, let's say an objective state of mind. You could even say, define an objective state of mind as having simultaneous awareness of everything going on at once. Because that's basically what it would require. Simultaneous awareness of everything going on at once, which would also be like maybe part of the definition of God. Simultaneous awareness of everything going on at once. If you don't have simultaneous awareness of everything going on at once, then you are experiencing something less than what's being made available in any given moment in terms of the way either the market or the environment is expressing itself. Now, what we want as traders is we don't necessarily have to be able to perceive the full repertoire of all the patterns that the market can express. But what we do want is we want to be able to perceive what we've learned. We want to be able to get whatever percentage we've got. And the more fear that we operate out of, the less we perceive. So we go down almost to zero. We can get to the point where we're almost down to zero, down to nothing. We're only perceiving one possibility out of the many that may exist in any given moment, based on how much fear we're operating out of. Fear closes, in other words, an objective state of mind for each of us as individuals would be to be able to perceive 100% of what we've learned. 100% of what we've learned. Since all of us in this room have learned to recognize the nature of a trend, then we don't want to be in a position where we have the potential to define and interpret any of these up and down ticks in painful ways, because we will lose that ability to perceive that trend in that moment until we're out of the trade. So here are the typical errors that we can make. Won't predefine the risk in advance of getting into a trade. And it's amazing. I mean, it's just like, you know, it's amazing, you know, that everyone in this room knows from every book you've ever read, from any great trader you've ever heard talk or you've talked to, and yet we'll continually make these errors over and over again. All that's really telling you is that you haven't learned how to think in probabilities yet. You haven't really learned to think in the market's perspective. Why? Because from the market's perspective, what does it take? It only takes one trader somewhere in the world to negate the positive outcome of your trade, right? That's all, just one. Now, once you really believe that, now think about this. Once you really believe that, will it be possible for you to ever get into a trade without predefining your risk? It's very difficult, very, very difficult to act in a way that violates what you believe. It takes an enormous amount of energy. Think about this. How often can you act in a way that contradicts what you believe to be true? How often have you, or what would it take for you to behave in a way that contradicts what you believe to be true? It's extremely difficult, isn't it? It takes an enormous amount of energy depending on how strong the belief is, put it that way. Do people go around violating their beliefs? No. People fight wars over their beliefs. We fight for our beliefs. We get into arguments and conflicts based on what we believe. If you believe that it really only took one trader, just one trader somewhere in the world, to negate the positive outcome of your edge, would you ever get into a trade without predefining your risk? No, you wouldn't. You couldn't.
Could you, like that example there, could you tell me how you predefine your risk in absolute terms?
There is no absolute. I said it was an educated guess. Where?
Okay, what would you define your risk as? It could go all the way down, or?
Educated, okay? In other words, when you look at these kind of patterns, and depending on the time frame, if this were a daily chart, as opposed to a 2-minute chart, you'd have to risk a little bit more, wouldn't you? The distance you'd have to give the market in this case on a daily chart would probably have to be more than what you would on a 2-minute chart. But what you do is, all you do is you look at this chart, and it's just something that you know, you get after years of experience or years of looking at charts, and not even years, but at least enough where you say, you know, what would you, David, where would you put your risk? You know, how much you risk on a trade like that, in a pattern that looked like that?
Eighth quarter point.
An eighth or quarter of a point, because what kind of charts do you trade?
1 minute charts.
He trades 1-minute charts. Now, if you were trading a daily chart, how much would you risk?
A couple of points.
Yeah, a couple of bucks, right?
It's also called money management.
Yeah, it's just you know, you've got to give on a long-term chart, you've got to give the market more room than on a short-term chart. In other words, on a short-term chart, this trade should work right away. And if it doesn't work right away, it's probably not going to work at all. It doesn't matter, because even if it doesn't, you cut your loss and get right back in again. Well, that's something.
That's a whole
Yeah, it's a whole other skill set you've got to learn. But are you with me on this? Okay, but it really is an educated guess. Now, you can mathematically determine this based on previous experience. In other words, you can run all kinds of back testing on this kind of a pattern and say that based on what you have here, if you can duplicate this pattern over and over again, how often did the market come to this point and not quite stop you out and then go back up again, maybe go a little bit beyond and not go back up and not, after you've been stopped out, and how often did it stop you out and just keep on going? I mean, these are things, just based on people who get into really sophisticated system testing that, I don't particularly do that. I just eyeball it and say, how much room am I going to give it? What's the dollar value of that distance? And if I can accept the dollar value, then I take the trade. So John, did I answer your question? Okay.
Give us an educated guess as to what you
So John, did I answer your question? Okay.
give us an educated guess as to what you'd say is your tolerance for those down ticks in the uptrend.
Huh? Well,
The other direction, when you got an uptrend going, how much tolerance would you?
we're going to do this on Sunday.
Okay.
Well, I'm going to give you a way to handle this on Sunday so that you can stay in this trade. If that's what you're asking me.
Yes.
Okay. Okay. Another error. Define the risk, but won't take the loss. It turns into a bigger one. Okay. A perfect example. There's a money manager that many years ago that came to a workshop just like this one, and he went back home. And in fact, it's an example I even put in Trading in the Zone. And he was waiting for a belly trade for quite a while, as a matter of fact. And he had all his analysis done, and he was waiting for the market to get up to a certain point. He was going to sell, and so as someone who actually had a degree in probabilities, he said, okay, I think in probabilities, and therefore, as a good trader, I'm going to put my stop in the market. So he did what he needed to do, right? But does that mean just because he went through the motions of putting his stop in the market that he truly accepted the risk of the trade? See, if someone can put a stop in the market but still not be completely reconciled to losing the money. Then what did I say? What did it mean to accept something? To be completely reconciled, to be at peace. In other words, there aren't any competing and conflicting mental forces inside of his mental environment. So he put his stop in. The market started, moving against him, past his entry point, and he convinced himself at that point that he was going to get stopped out. He never would have gotten stopped out. He blew out of the trade. The market completely reversed, and it turned out to be a huge winner. He never got back in. And he called me up and said, "Hey, what's going on? I did what I was supposed to do. I put my stop in the market."
You said he adjusted it.
But yeah, but he took it out. I mean, he took it out because he never really accepted the risk.
Right. It was almost as if he was shocked when it didn't.
Right, exactly right. He was shocked because it didn't immediately reverse after he got in. That's what it really amounted to. And see, the thing is, here's where really, where we also have this potential to define and interpret market information in painful ways, is because we talk about emotional pain, all of us want our expectations fulfilled. And see, when you think about what an expectation is simply a belief projected into some future moment in the environment. Now think about what I just said. We can't expect something that we don't believe, or that we don't know about, put it that way. So what I'm saying is that an expectation is something that I either expect to see, hear, taste, smell, or touch in some future moment. And if the market shows up exactly the way I expect it to, now this is universal, by the way. This isn't just Mark, this is universal. If the market or the environment shows up exactly the way I expect it to, how do I feel? I could, depending on what the situation was. Yeah, satisfied, at least. At the very least, satisfied, right? And to whatever degree the environment does not show up the way I expect it to, how does that feel? Yeah, pain, emotional. It has the potential to cause me to experience emotional pain. So when you really get right down to it, to think in probabilities, we have to learn how to manage our expectations. Our expectations have to be in line with the realities from the market's perspective. But before we get into that, let's just finish up these errors. Okay, hesitate as a result of an internal argument, get in too late or not at all. Jump the gun, anticipate an edge that never develops. Getting out of a winning trade too soon, leaving money on the table. Move a stop close to your entry point, get stopped out, and the market goes back in your favor. Let's see, I had another one. Okay. Anyway, these are all the, not all the errors that people can make, but all the typical errors that people make as a result of not thinking in probabilities. So what exactly does it mean to think in probabilities? It means believing at the very core of your identity that 1, anything can happen. 2, every moment is unique. 3, there's a random distribution between wins and losses on any given set of variables that define an edge. And 4, you don't need to know what's going to happen next to create consistent results. That's it. Now think about those statements. Just for a moment. If I believed that anything could happen at any given moment, and I believe that every moment is unique. Now think about the word unique. What does that imply? Right. Now think about it. Every moment is unique. That means not like any other moment. Unique means not like any other moment. If I believe that this moment is not like any other moment, then what does my mind have the capability to associate that moment with?
Why put the trade on?
You can accept any outcome.
I can accept any outcome then. We say, why put the trade on? Because you've got an edge.
No, I was bearing not having an edge if those two.
Oh, no, yeah, you've got an edge. You've got an edge.
Okay.
You've defined your edge, but okay, this moment, there's a pattern, and this moment is like, let's say, we'll put it this way, just so you're not confused about this, that you've got an edge, and you're basically trying to develop a two-tiered belief system. One, where at the macro level, you know that patterns exist, but at the micro level, the patterns have a random distribution in terms of outcomes. So that I've got a pattern, and that as a result, that pattern has a potential to cause me to, let's say, by behaving in the appropriate ways, to enrich myself. But that the outcome to that pattern is unique in relationship to anything that happened in the past. So, but I was just talking about the concept of uniqueness itself. In other words, once I get that trade on, if I believe that each moment that it's on, that each moment is really unique in terms of what the market is telling me in that moment, then I'm going to keep my mind open to what it's telling me from its perspective. What I want to do, the whole objective, is to disassociate what's happening now with any other outcome that you had. To disassociate. Because the reality is there really is no relationship. That really is true. Our minds don't look at it that way, but it really is true. Same thing, there's a random distribution between wins and losses in any given set of variables that define an edge. Now, if you think back to those errors, those kind of errors that we have the capability of making, or I don't need to know what's going to happen next. If I have those 5 beliefs installed in my mental environment in a way where they're functional, and we're gonna get into what that means to be functional tomorrow, then I have basically eliminated my potential to define and interpret market information in a threatening way. If I've eliminated my potential to define and interpret market information in a threatening way, then my expectations will be neutral. And I will be in an objective state of mind, leaving myself open to whatever it is that I've perceived about the nature of market movement, meaning that I'll be able to perceive all the patterns that I've learned about. I'll go back. Won't define the risk in advance of getting into a trade. If anything can happen and every moment is unique, am I going to get into, if I believe that, am I going to not predefine my risk? I define the risk, but won't take the loss because it turns into a bigger one. The only way that I could not take my stop out of the market, let's say, or not execute a losing trade based on where my predefined risk point would be because I have convinced myself that I know what's going to happen next. Is there any other way I could do that? I pull my stop or not execute a losing trade only because, one reason, every error that you're going to make, all these errors right here, every single one of them, we're going to go down the list, and any other ones that you could think of, are all going to be the result of thinking you know what's going to happen next. Thinking, assuming, or believing that you know what's going to happen next is what causes the errors. These 5 fundamental truths that I just gave you about the nature of the market break that. I shouldn't use the word break. It stops that whole process of thinking, assuming, or believing you know what's going to happen next. Because you've learned that you don't need to know what's going to happen next to make money. And you don't. Really, what is trading when you think about it? You break the act of trading down. It's really simple. What is it? Not just an educated guess, but what is it? An edge. Define the risk and execute the trade. It either works or it doesn't. That's all trading is. That's it. You don't need to know what's going to happen next to make money in this process. That isn't part of the process. The process is define an edge. How do we define an edge? A higher probability of one thing happening over another. Not what going to happen for sure. A higher probability of one thing happening over another. Define the risk, an educated guess, or it can be precise, whatever, use a mechanical system, it doesn't matter. All I'm saying is that this is the process. Define an edge, get on an edge, define the risk, execute the trade. That's trading. That's trading. There's nothing in that process that has anything to do with knowing what's going to happen next. When you get right down to it, it isn't any different than pulling the handle of a slot machine, only you've got the edge in your favor. The pattern either works or it doesn't. And you've got a way to take your profits, but otherwise that's going a little bit beyond this discussion at this moment. All I'm saying is that, you know, either works or it doesn't, you go to the next trade. Either works or it doesn't, you go to the next trade. Either works or it doesn't, you go to the next trade. If you're the kind of person who likes to use their intellect to determine what's going to happen next, you're going to have a problem being a trader. That answers your question too. That's someone who needs to know what's going to happen, who needs to have that kind of certainty that I don't act until I know what's going to happen next. They have problems being traders. You have to be really comfortable with uncertainty, that it doesn't matter. Because what do I need to know? First of all, I don't have to take responsibility for what the market does. I don't know what the market's going to do. It's a collection of individuals who are going to act in some particular way. I know the market's going to do something. I know it will do something. That's the expectation I have when I get into a trade. I think it's going to do something. What? I don't know. I don't have to know. I don't care. What do I know? What do I know? What do I have to know? Come on, what do I need to know?
Probability.
What?
You have an edge and there's a random outcome.
I need a edge, and what else do I need to know? What my risk is, right?
Your risk.
Yeah, that's it. That's all I need to know. And how I'm going to take my profits. That's what I need to know. That I know every time. If I don't know that every time, I don't get into a trade. As long as you get into trading with this idea that you've got to know what's going to happen next, you think you're going to know, you're always going to be susceptible to these errors. You're always going to be susceptible. I'm not saying you won't make money, because you know what? You can make money whether you make these errors or not. Remember, you don't have to know anything about the market. You don't have to know anything about yourself. You don't have to know anything about what we're talking about to make money. And you can make all these errors and still make money. Yes or no? Yes, you can. Will you make consistent money? No, you won't. That's a fact. So we're kind of getting to the point where we're getting an idea as to what we need to do here, right? Are we getting an idea of what we need to do? What do we need to do? Stop trading. I like that. What do we need to do? Where do you think we're going? Where do you think we're going in the next 2 days on Saturday and Sunday? Where are we going? What are we doing?
Reinforcing these.
Go ahead. Somebody. Go ahead. David. What?
Reinforcing these notions.
Notions? Okay. That's all right, Dave. It's all right.
Mindset.
I love it.
These well thought out ideas.
Yeah. Oh boy. Yeah, that's exactly
That's probabilities. It was just
yeah, that's exactly what we're going to do. We are going to learn enough about the nature of beliefs and how they function in our mental environment so that we can effectively install these beliefs inside our brain at a that's what we're going to learn in the next 2 days. Besides also learning how to identify and neutralize self-sabotaging beliefs and what to do about euphoria. This is what this workshop is all about, right here. When you've got those in your brain at a functional level, you will stop the errors. They cannot happen. And to the degree to which they do happen is just an indication as to how much work you need to do to get those in your brain at a functional level. And if you really want to if your desire is strong enough to create consistent results, you'll do the work. If it's not strong enough, you won't. It's kind of that simple. And you don't have to feel obligated to do the work, like I said in the very beginning. It might take a long time to get to the point where you're really willing to do what you need to do to get those beliefs in your mental environment at a functional level. Because I'm not saying you won't make money, because you know what? The pattern either works or it doesn't. And you've got a way to take your profits, but otherwise it's going a little bit beyond this discussion at this moment. All I'm saying is that, either works or it doesn't, you go to the next trade. Either works or it doesn't, you go to the next trade. Either works or it doesn't, you go to the next trade. If you're the kind of person who likes to use their intellect to determine what's going to happen next, you're going to have a problem being a trader. That answers your question too. That's someone who needs to know what's going to happen, who needs to have that kind of certainty that I don't act until I know what's going to happen next. They have problems being traders. You have to be really comfortable with uncertainty, that it doesn't matter. Because what do I need to know? First of all, I don't have to take responsibility for what the market does. I don't know what the market's going to do. It's a collection of individuals who are going to act in some particular way. I know the market's going to do something. I know it will do something. That's the expectation I have when I get into a trade. I think it's going to do something. What? I don't know. I don't have to know. I don't care. What do I know? What do I know? What do I have to know? Come on, what do I need to know?
probability.
What?
You have an edge and there's a random outcome.
I need a red edge, and what else do I need to know? What my risk is, right?
Your risk.
Yeah, that's it. That's all I need to know. And how I'm going to take my profits. That's what I need to know. That I know. Every time. If I don't know that every time, I don't get into a trade. As long as you get into trading with this idea that you've got to know what's going to happen next, you think you're going to know, you're always going to be susceptible to these errors. You're always going to be susceptible. I'm not saying you won't make money, because you know what? You can make money whether you make these errors or not. Remember, you don't have to know anything about the market. You don't have to know anything about yourself. You don't have to know anything about what we're talking about to make money. And you can make all these errors and still make money. Yes or no? Yes, you can. Will you make consistent money? No, you won't. That's a fact. So we're kind of getting to the point where we're getting an idea as to what we need to do here, right? Are we getting an idea of what we need to do? What do we need to do?
Stop trading.
Stop trading. I like that. What do we need to do? Where do you think we're going? What are we doing?
These notions.
Notions? Okay. That's all right, Dave. It's all right.
Concept. Mindset.
I love it.
These well thought out ideas.
Yeah.
Not answering.
Yeah, that's exactly what we're going to do. We are going to learn enough about the nature of beliefs and how they function in our mental environment so that we effectively install these beliefs inside our brain at a function.com. That's what we're going to learn in the next 2 days.
There we go. Okay. Whew. Well, if you could not tell, I was getting pretty frustrated. I'm sure like the live stream was choppy. Okay. So, if you couldn't tell by my facial expressions, I was getting really frustrated because my computer just can't handle all these programs running at once. I use SoftFX, and then I have OBS. I have a few tabs. You can see a lot of tabs open, and then I have another live stream section open. And I closed out as many tabs as I could, but it just couldn't handle it. So I'm gonna finish the last 15 minutes off live stream. I'll stick on here for another about 15 minutes. Happen again. Yeah, okay. Okay. Yeah, so, yeah, it just keeps on frustrating me more and more. But we're gonna get through it. Another thing could be, like, this is the longest I've ever run a stream. It's gonna be about 2 hours now. And a simple solution is just buy a new computer, new laptop, which, okay, I'm gonna check it off the list. It's becoming mandatory. Because during backtesting sessions, like, I get into it, like, it takes me like 20 minutes to actually get into a zone. I know for a lot of people, or what's strongly recommended is like do 25. What if I just show my face? Can we do that? Change the properties. Okay, just gonna show my face. Hopefully this allows me to keep talking without it skipping through. I forget what I was saying. Let me see. It's sheesh. Alright. I'm trying to stick it out till 9 o'clock because I told people that were on here earlier that I'd be on here till 9. And if they come back and have questions, alright, I'm about to hop off, bro. 5 minutes. Got to stick here for 5 minutes. If there are any more questions, please go ahead and ask them. I'm going to type that out. So hopefully the playback isn't gonna have like these like chops or anything. But anyway, nothing's changed on anything that we marked up at the beginning. No requested pairs. 4 more minutes. Gold has not scaled down. It's just stayed where it's at. EURJPY, I'm not being active on that. Bitcoin, nothing there either. Okay. Three minutes and we're out of here. Stop watching the time. How do you stay patient while trading? That is a learned skill. I mean, eventually you get your ass whooped on that time, and you're like, oh, okay, let me sit down, humble myself. Hold on. Okay, but seriously, yeah, that's true. Like, there's some things that I wasn't really patient on, and it just took me just losing so many times to say, okay, let me calm down. This is what I need to do. I need to follow. I need to wait for everything to happen, everything to line up, and then do this. Don't take action until everything is there. And that's just, I mean, getting hit so many times until you learn your lessons. Other than that, it's backtesting also helped with patience. Backtesting helped with patience because the more I backtested, the more I realized that, okay, if I wait for all my confirmations instead of rushing it, if I wait for all my boxes to be checked off before taking this position, most likely it's going to play out. So I was like, oh, okay, so it doesn't make any sense. Okay. Catch up with me. Then it doesn't make any sense to even take the position. I hope that doesn't get cut out. And let's say while you're holding the trade, also backtesting help with that, because I noticed, okay, if I just hold on to the trade until my targets or manage my position how I'm properly supposed to do, I'll make money. And when I don't do that, I lose money, right? So it's like just realizing when you don't do certain things, at least for me, this is how I view it. I kind of see it's kind of stupid to not follow my rules, because, and sometimes I still don't follow my rules. It's kind of stupid to not follow my rules because I'm going to get the result that I don't want a majority of the time. So really just get as much experience as possible. And reason I say that, my mentor, the person that taught me the strategy, or at least the basis of the fundamentals of the strategy that I use, and he helped me out a lot, especially during that first year of trading, and second. So he was telling me how to be patient. He's telling me, hey, be patient. Even if it takes you 10 years to get this down, you'll still be you'll still be in a better position than most people in their 30s, right? Because at the time I was 20 years old. I'm 22 now. And I heard that. I understood that. I was like, okay, I'm in a position. I'll take me 10 years. It's better not take me 10 years. So I kept telling myself it better not take me 10 years. And I would be really aggressive in how I was studying, which is good in a sense, but also bad, because the motive behind it was to get as much money as fast as possible in the situation. And it wasn't until what shifted. The last account I blew that first year was a major shift, realizing, hey, even if it takes 2 years to build this account up, you'll still be good. Even if it takes 5 years, will you still be doing this? Absolutely. Because there's too much upside potential to just give up on this type of thing. And yeah, experience is gonna be the main shifter for you, or at least it was for me. Because any amount of words, no matter what my mentor said, no matter what anyone said to me, I struggled with the patient side, and I just had to keep on grinding, getting humbled, getting beat up by the market to realize I need patience. I need to stop doing what I'm doing. I need to just wait, whether that's holding the trade or waiting for the setup. Let me go back to the chart, or not the chart, but the chat, just in case someone tell you something else. You trade any pair or have hold on, my bad. Okay, I'll try to keep this answer shorter. I want to make sure that my audio is actually getting through. Yeah, so I only trade pairs that I backtest. If I haven't backtested a pair, I don't trade it. And pretty much all that whole 25 list that I have, I backtested everything except for Euro Swiss, and Pound Swiss, which you never see those on my list ever. And backtesting at least 50 trades. I typically like to do 100 trades before actually taking or trying it out live. But my top, the pairs that I have the most testing on are EURJPY, Dollar Swiss, Dollar Yen, Pound Dollar. I backtested 10 years of Pound Dollar, 5 to 6 years of Dollar Yen, Dollar Swiss. I'm at about 8 years now, and then Euro Yen. I'm at around 5 years. I don't think I'm quite at 5 yet. Okay, so that looks like it's all the questions. Sorry for all the choppy audio and recording, but I really do appreciate the questions. I like having actual interaction on these calls, and if we keep up with the interaction, I may start once I get a new laptop. I'm not gonna start I'll start doing Zooms. I'd really love to do Zooms on here because I like to, like, I wouldn't mind, like, actually, I kind of do mind. But I like to be more interactive and actually, like, be able to walk people through charts, because helping people out or teaching, or at least sharing ideas, because I don't know everything. I still have a lot to learn. I'm still in the beginning stages of my trading journey. But just having to communicate with and walk each other through processes really helps the learning process and helps me at least to learn faster. So in the near future, I'd love to do Zooms with you guys, go back and forth sharing each other's charts. But I will catch you guys later. Thank you for watching.